Hello traders, welcome back to AskTraders.com, and today we will be giving yet another weekly analysis. This time we will look at the Australian versus New Zealand dollar. This currency pair has been actually analyzed before. We were expecting the downtrend to begin, although then last week we have changed the sentiment on the Australian dollar overall, and we actually gave analysis on the Australian Swiss franc with a potential upside move. And today we will continue the topic on the strong Australian dollar. And this time we will be looking yet again on the Australian New Zealand dollar. So what we have here is that price moving up overall, and we see that there is an average price uptrend trend line. The last time price has bounced off this trend line was at this point at 1.0576. This has been area of support which has been rejected. After that, what happened is that range trading has started, and if I just zoom it in, what we can see is that there was resistance at 1.0728. Few times rejected, but then it has been broken finally. And prior to the breakout, we actually had this bounce of 227 point fips. The fips I used was applied to this last wave to the upside. It gave us two levels. First is 88.6 fips, and second is 227.2 fips. Here, there was no daily breakout of this level. The price actually opened lower on the weekend, although the daily close has been above. So if I zoom it in, we can clearly see that the daily close was above this support. So this support remains valid. And back to the 4-hour chart. So what we had is the breakout above this resistance at 1.0728, and now what we see is that price returned back and rejected the trend line, uptrend trend line, cleanly. And for this reason, there could be a massive support actually forming at this price area. Besides, we see the 200 exponential moving average, which is being rejected. So price has been stuck at this level for quite extended time. And if this level holds, we should expect one wave to the upside, at least one wave, after which price might go down sharply. But this will be the key resistance. Why? It's because it's based on 2 Fibonacci, which gives us a strong resistance. First is 88.6, and then we have used another Fips when this support has been rejected, and it gives us 161.8 Fips. And this means that if the support holds, we should expect this move to the upside. Besides, it corresponds to our another trend line, uptrend trend line, which is average price trend line. And the resistance can be reached as soon as the 2nd of June. Now, in regards to the downside potential, we have two support levels. First is at this stage where the trend line has been rejected, and the second is our 227 Fips. It looks like the critical point could be this price area produced just below the support. There was a spike below, and the spike has tested 1.0633. If we will have 4 close below this level, the upside scenario will be invalidated. In this case, price might actually initiate the downtrend, and we will see a strong move down. But for now, it seems that price is getting ready to produce yet another wave to the upside, although the consolidation can be extended further and price might be stuck yet again between the current price and this resistance at 10728. And before we finish, I would like to share with you the previous analysis Australian Swiss franc, just to have a look what happened. What we have here is we were expecting this move to the upside towards 161.8 Fips. And it also corresponds to Australia and New Zealand, because here we have also 161.8 Fips. So these are kind of moves that are expected. We can see that the support hasn't been broken. Yet again, there was a daily open price, but no closing price below this level. And currently price remains very close to the support. And as long as price remains above, the daily close remains above this level at 0.6478, we should expect the move to the upside. There can be potential of the breakout of this resistance, and then there will be a strong uptrend most likely. But this is the nearest resistance that we would expect. In regards to the downside, same basically as on Australian and New Zealand dollar. If there will be break and close below this level on the daily chart, we will actually confirm the breakout of 200 exponential moving average. In this case, there can be stronger and more volatile consolidation, and perhaps then price can go to the downside. So these are the key support levels for Australian Swiss franc and Australian New Zealand dollar, and we need to watch. So price basically stands at very important demand zones, both Australian New Zealand dollar and Australian Swiss franc. That's it, guys, for now. Hope you enjoyed it. Next week we will come up with yet another idea, and we'll obviously update you on these two ideas. Take care and profits to you.